Are we live? What is up, everybody? Good morning to you. The gang is back together on this lovely, lovely Friday morning. It's Voodoo's birthday, so you know we had to come on, talk a little bit of stocks, levels, and things like that. And it's not a show if I don't bring on Money Mitch and Lord Ryan. What's up, fellas?
Happy Friday. Happy birthday to Voodoo.
Happy Friday. Happy birthday. What is going on? Look, here's the way it's going to go down, chat. We're going to show you guys a couple of our levels, talk a little stocks, maybe do live trading for about 10 minutes or so because we told Voodoo we'd come on and celebrate with him with a little bit of live trading. So we squeezed it in as much as we could. Ryan, if you're ready, my man, I'm going to have you go first.
Yep, I'm ready.
It's all you, pal.
Ready. Come on now. What's going on, Zoltan? Good morning. All right, really quickly, we're going to run through these tickers. We only have a few here on the movers tool. These are setting up our gaps. First one here is going to be PXMD, Papa X-Ray Mary Delta. We've traded this one before. Pax Medica shares are trading higher if the company announced an equity investment agreement of up to $20 million with Lincoln Park Capital. Lincoln Park Capital is sometimes viewed as one of those firms where stocks go to die, so kind of keep that in mind. We are seeing a pop here. We've bled back a lot of the gains. As long as we can hold that $2.05, $2 level, perhaps we can pop and take out some of these ranges here. Love to see it cross through VWAP and build above, as always. Next one's going to be QHO. This one we've traded recently. In fact, I only had to add one line this morning. It was the 210 line. That was our pre-market high. The 213 line existed from a previous day when we were on here, or when we actually charted this. You can see right here, 244 was that high. It does look like we're trying to curl here. Let's see if this gets some momentum. What we're really going to need to trigger an entry trade on this stack today is going to be volume. It's up here. There was a little bit of volume, but we really want to see a lot more. So that's going to be next. UCL. Also on the list here for this morning. So this is UCloud Group Inc. This is trading up here. We had a resistance area here of about 289 to 295. So that 6-cent area in here is going to be resistance if this can get going. Again, we're below VWAP here. Those are the only three I got.
All right. Appreciate that, man. Nice little quick run through. I appreciate it. Money Mitch, what you got?
All right, so today, of course, we're going to be watching to see if the SPY gets back towards the 400 area. And one area that I definitely say to watch for shorts is in energy. We've been looking for this to kind of happen. It hasn't really turned around, and now you're really starting to get that turnaround in, of course, crude prices dropping below 80. Talked about that level multiple times, how important it would be to hold it. Now that you're cracking, I do think that you're going to get some pullback in these oil stocks, so you could be seeing some drops today in oil. Now, stocks that could go up, right? Well, we'll look for the stocks that got the pullback on the last 2 days. So a stock that could go up today is Amazon, definitely on my radar, especially if the market wants to go and make that move to 400. So look at the hourly pullback level, right? You guys see this hourly pullback level. We cracked through a little bit on yesterday, started recovering around the 95.25. Maybe you're bringing this down towards 95 just overall. Now that's kind of the support that I could see here. Now, what are we looking for? A nice little push up towards? We're going to push. I'm looking for a push up there through the 97 and then pulling back for a nice little push up. Then we can get it to come back here towards the 100. That's going to be a level that I'll be watching on Amazon. Ross Stores had big earnings push there. Might get a big pullback. Look for that maybe out the gates. TJX, really decent earnings. Didn't look too bad yesterday. Did pull back. Now let's look for it to maybe
went to, and then $50 is exactly where rejected from. You can see it. Tried to go above. It said nope. Didn't even give it. I think. Wait. Let me before I talk a lot of smack. Yeah. Didn't even give it a cent above 50, and then it came right back down to the level of 48. So this was a nice little play. And then I want to go to Tesla because here's a mistake I made on Tesla. You can obviously see the trend line. You can obviously see the 186. That is the top, if you will, of yesterday. And I went short somewhere in here, and then it kind of bounced. So I had to move my trend line. But then, unfortunately, I didn't set my fire alarm. So therefore, I couldn't get alerted when it went ahead and broke this level. You can go on the 5-minute and see just how clean it is. This is where I kind of went short. Got stopped out, and then I, went to go, I don't know, garden or something. And then when I came back, I just didn't have my alert set, and it just started bleeding down. But this was a nice little trend line break that you had. I believe Amazon is the one that I did get a chance to play. Again, same little trend line play. So, starting to kind of see these patterns in the market a lot better than I have in the past. And that was a nice little bleed through. So let's talk about what we can play today. Well, for Coinbase, we'll go back to it. You've got $50. That's about $1.20 away, give or take, right? So if it approaches $50, you can go ahead and give it about maybe 55 cents to maybe 50, 55. If it breaks that and it is a retest of 50, you can try to go along with about 55 cents to the downside on coin. On Tesla, it's obviously got to be the 186. I mean, look at the resistance, how strong it was yesterday throughout the day, and how strong it is here in pre-market as well. So keep an eye on that 186. If it rejects again, give yourself maybe about 50 cents or $1 to go short. But if it goes ahead and props through, as always, wait for that retest and maybe give yourself to about 184.90s or so. Give yourself $1 to the downside. If we do go ahead and clear that 186, 188, and then 190s is what's next. So $2 each way to the upside. Let's go to talk about the SPY, as that one's looking to break above the 398 level and possibly get to 400. You can see the 395 is what held as resistance yesterday. Got the levels. Matter of fact, let's kind of dive a little bit deeper into this one. You've got, quick little lesson on support becomes resistance type situation. Here you've got resistance that was broken. I could not go long because I sure as heck wasn't going to chase, but I also didn't get the retest. So I said, you know what, leave it be. Then it went ahead and broke through this area here, the 393.67s. Couldn't quite get the retest until much later on. You can see resistance, broke through, and obviously the resistance on the 395. Then we come down, and this resistance area has now turned into support, bounced, but made a lower high. And then when it finally cracked here, retested it. Downside, we went to test this one, quite slightly broke through, but then it came right back up, regained it. Went up here, resistance, which was support, but then it cracked, which become resistance again, and to the upside. The whole point is keep an eye on your charts, draw those demand zones, supply zones, your supports, your resistance, because they often do turn into each other, vice versa, if you will. So that being said, 395 is what I have as support. Since it was such a major resistance level, I'm going to have it as support here on the 395s, and then 400 is going to be the big key level that we got to break through. 398 first, and if we go ahead and crack above that, it's going to go ahead and be 400, and then we'll see what happens. Let's go ahead and talk about the futures market, because I've been donating money there. I'm a big donor there. You've got the 39.50 level. I believe it was last night that I got a chance to play. Where'd it go? I think it was somewhere here. There you go. You had a little bit of a bounce here, but I went ahead and got stopped out. Then I went to bed. But then after it reclaimed it here, it looks like at 2:30. It's just been a nice little upside move. But I've got the daily levels kind of marked off here. There we go. So I've got levels here at 40.1750 and then 40.52 as resistance that we can possibly go ahead and run into. So those are the levels that I have. And obviously 4,000 is going to be a psychological one. So if we can break through 4,000, retest it, maybe we can get yourself a 17-point move till the next resistance level. Then we break through that and you can get a little bit more upside. Shout out to Voodoo again. Happy birthday to you, pal. I reread our emails about futures, and I think on TOS, I've got the 2,000 tick mark. I've been trying to find it on TradingView. I'm not sure I found it yet. They're like a bunch of weird scripts that just confuse me and make me feel dumb, so I haven't gotten a chance to use them. But that's kind of pretty much what I have. We've got a few minutes left, fellas. If you guys had any other charts to go through, if not, I can continue.
Yeah, I do. Real quick, this actually answers a question that I had from last night. Last night, I signed on to my computer to do a little bit more work, and I noticed that Zunaid was online. So I started sending him messages, and he just completely ghosted me and didn't even respond. And now I know why. He was donating money to the futures market. So my question's been answered. Totally a normal thing.
Let me see what message it was. Hold on.
I was just asking you if you're going to the quarterly so we can meet up and hang out.
Gotcha. I just saw that.
Aside, the one thing I did want to address, Becca, here, Ryan, I was going to ask about UCL, but was not sure if it already ran too much over the days. So, first of all, let me pop my screen here. So that's definitely something to consider. You should consider that with all of these stocks. And if you take a look, this is what she's talking about here, right? We've had a really, really strong move here. We actually took a break and consolidated around 2 and then took the next leg up. The reason, one of the reasons why I'm going to be watching this is because if we look at the chart, first of all, we can see that it's done this before. Like the last time that it really went up, there were 5 consecutive days of this stock making new highs. And it was, and in addition to that, we're actually trading up right into this consolidation zone. So does this mean that the stock's going to continue? No, it could very easily be rejected here and reverse and go back down. However, if this supply area gets cleared out, I wouldn't be shocked if we tested some of the other levels from this last move, and thus we would have a pretty nice trade in our hands. So good spot there, good thinking. I like how you're thinking with process, saying, oh, well, this is up today, maybe it's near the top, right? So that's what we're going to watch for. That's another reason why we really want to pay attention to these support and resistance levels, and we don't want to overstay our welcome. If we do get one around a near-term support, we get any type of profit, make sure you book it in case we get rejected at the resistance area and come back in.
All right, appreciate it. We've all made donations to futures. It's all, yeah, that, you know, that's what I tell myself. I'm like, look, I make money during Benzinga and esports hours. I donate it during the futures. As long as I'm net positive, I'm okay, right? We can afford a little bit of ramen here and there. But yeah, I was trying to see if there's a gap to fill to the upside. I didn't quite see one. But let's go ahead and talk about Apple as that little puppy when it had resistance at 150. Here's another look at it. And of course, Mitch, if you have anything else in a minute, feel free to. But you've got the 150 level right here. You can see resistance came down almost 50 cents. And I know almost because I had my covering on my short at 55. But of course, you guys know me. I didn't get filled on that. And then we finally go ahead and break through the levels of 150.31 to the upside. We come back to the 150s, and then it just wasn't as strong. So now the 150.30, 150 areas where I'm kind of keeping an eye on things. You are making highs already in pre-market. So we'll see where that one runs. I would expect a little bit of resistance. Let's go ahead and look left. You've got a little bit of resistance that I would assume and expect at around 153.61. So if Apple's going to run up, keep an eye on that level. And then, of course, after that, you've got approximately, I would say the 155 personally, but then you do have 155.39 to worry about. So plenty of ways away. But Mitch, you got anything else you want to cover?
I'm going to be looking at maybe Netflix here to get back above 300.
That's a good one.
That's going to be an interesting level to watch for on the daily. That one had a double upgrade 2 days before when it started kind of retracing that. We were up towards 310s. Can we get back to the 300 level? The left-hand side has resistance there also. Then the next level from there is up towards 305. So get to 300 today. I think why not maybe potentially targeting 305. We'll see what happens here out the gates. Lots to going on. Time to make some money.
Yeah, we've got a couple of minutes. And now that you brought up Netflix yesterday, I got a chance to watch that $300 reject that there was right there on Netflix right here. This little area, right there, $300. Went, tested it, said no thank you, and then it came right back down. That's a $6 move to the upside. So you guys know I like to give stocks like these that are higher price about $1. So even if you went 1 for 1, you had it. If you went 2 for 1, obviously you had it. But that's what you have on Netflix there. Appreciate you going over that. We already talked about Amazon. Keep an eye on 94. What you got?
I was going to say real quick, but I thought you were done there. You did a great transition. You fooled me. Real quick here, just to address this question here. PanW has high short interest, or is it just me? Well, so according to Benzinga Pro, first of all, we have short interest right here in the platform. It's got its own tab. One of the things that you can see is that the last time that we got numbers updated here, it had 7.61% of its float shorted. The thing that's interesting to me about the short interest here is that its days to cover is actually 5.2. So remember, Palo Alto is an expensive stock, doesn't necessarily trade on gigantic volume. So even though 7.6% of the float is shorted, it would still take 5.2 days for all of these shorts to cover. That does mean it could pop and squeeze if there was some type of squeeze activity. I don't think it's going to be an epic one, but just to answer your question, here's the short interest. As far as percent float shorted, I would say that there's nothing outrageous there. Days to cover, a tad on the high side.
We'll see if that one has a nice little move to the upside. That's a nice little price stock too. Let me take a look at that one. Let's check out the daily on that.
This reported earnings Tuesday.
Yes, it did.
So you might have a gap and move here. Really, the question on PanW is going to be, if people take profit, where does it actually find footing, right? This is going to be best in breed when it comes to cybersecurity. And some cybersecurity stocks really haven't done well. PanW seems to be immune to that. It seems to continue to perform over and over. So Nice little stock.
Just quickly turning it over to me on my charts. This is what I've got on the daily with this crayon drawing. So feel free to use it. Obviously, we are well above it on the 170, 125. I've got for some reason it's 170.51 marked off here. Let's go to the hourly and see if we can figure out why. Nah, looks like maybe it was a previous trade that I tried to take, but I'm going to go ahead and take that out. But yeah, let's see how this one moves. We're getting closer and closer to the open.
There it is. Good luck, folks.
And there it is. I got the bell in my ear. All right. First thing I'm going to be
pullback on Amazon. Big pullback here right out the gates.
Let's go ahead and put up a 3 box. And then let's bring up the ASPY right over here.
Starter in Amazon, starting to size into this, looking to size into 95s. But after that, you got to be really hard to risk on my end towards 94.50. I just got a little starter there on Amazon.
I'm going to join you here as well. If 95.03 is where I am looking to get filled.
CrowdStrike moved down. Netflix moved down. Trying to get a real quick trade. XOM down move there. So oil doesn't look too bad, but definitely a little pullback there on CrowdStrike.
Crude down 4% here.
Yeah, crude, I pointed that out this morning. It could crack the 80s, and cracking the 80s is massive. We did just get a bounce there on Amazon. We got a low there of 95.05. I wanted to add there, but it was so quick that I wasn't able to get the add there.
I would say use limit orders, but what's the point of limit orders? I had my limit order at 93.03 and it went to 95.05. Excuse me, 95.03, 95.05 is where it went. I missed my entry by 2 cents and it went up 30 cents to my profit target. So
take that. By the way, did you guys see that Elon Musk tweeted the other day that the magic 8-ball knows all?
I did.
I did see that. Made my day, folks.
I can't blame you. Can't blame you. All right, getting my ads on Amazon now down to 95.22. Gonna risk it towards 94.50s. Let's see what happens. Let's see if we can get a little reversal style action there.
All right. Well, you know, I've got my stops and everything in place here. Let me go ahead and quickly adjust it before this thing completely blows out. Stop loss for me, it's going to be about 94.71. Looking to take profits at 95.18. Why was that rejected? What's happening?
YTRA maybe through 270 here. Volume has to keep up for this to have a good entry.
SPY pulling back here fast here. Just be careful, team. It is on a pullback. We'll look to see if it holds around, I say 396. That's kind of the level that I'm looking for. It's definitely not the crack here out the gates. We'll see what happens.
We're in the money here. So our average price is 94.95. We're currently trading at about 95.11s. It went as high as 95.18s here after the fill. So we're in the money. Be careful with it. 95.19s. I'm going to go ahead and move my stop loss a little bit higher, but we're in the money. Looking nice and pretty. Looking to take profits at 95.37. Come on. Oh, don't come down. Go up.
It was so close, Sinead.
Story of my life. Story of my life. All right. 3 cents away. Bro, come on. You know what? Greed is bad for everybody. Closed it out here. Took the gains. Wait, no, I did it almost. Oh, almost.
Good start to the day.
Order filled. There we go. 95.37. But shout out to Mitch, though, because he's the one who started taking the trade. Got me interested at the 95 level that we talked about.
I'm still in it.
Not going to lie. Was thinking about taking it with you, but was like, you're not prepared for that. Don't
the trifecta would have been beautiful.
I know that would have.
The trifecta would have been great.
I'm out here ruining Voodoo's birthday like a jerk.
It's all right. But look, doesn't matter if you trade for 10 minutes or an hour. You just need that one good trade. And we started off hot on this lovely Friday morning, which is funny because it's like 36 degrees outside and I'm like shivering. But
26 here.
Oof.
Got our first snow the past couple of days. It was awesome. ARDX through 183 here, maybe.
Why do
SPY not really giving me that lift that I was looking for in the SPY here? So I got to be careful here with this Amazon trade.
Why do I know ARDX? Was this a $2 thing
we
talked about? Recently. Okay, yeah, we talked because remember this one possibly having that $2 rejection. There it is.
Yep.
Real quick, the reason I liked Amazon is, of course, you had the level that we talked about earlier, right? With 95 being resistance and support, but also it was the previous close right there at 95.85, which is why I went ahead in with about 200 shares. Typically, I just go with 100, risk about 50 cents here and there, but I liked the fact that it was a $95 level and it was the 84.85 level as the previous close. So you can see I bought 100 shares at 95.03, and then I bought 100 shares at 94.86, right above the previous close. But let's see if we can get some more money for Mitch to the upside, as I'm out of the trade, but
you did it in hundreds. I did it in 50s, and I did 3. So just to kind of give you guys the insight of how you see us approaching sometimes. And so it was adding on the 95s.
And by the way, Pan W, which we talked about right here at the open, looking real good here, right? First move was down. Those are the profit takers that I thought we would see. Immediately found support around 168. Now we're actually testing the pre-market high here. So Pan W looking strong here after earnings. Wouldn't be surprised if this traded up a little bit more. Currently up 9% today, though. Keep that in mind.
All right, let's see what we've got. So you're waiting for the VWAP break to the upside, I assume, in tandem to the SPY. So let's go put the SPY up here to the left. We've got it. Let's put an Amazon to the right. There's that. 5 minutes on each one.
396.50s needs to keep holding here. We want the SPY to come back to VWAP and start showing a little bit of strength. We'll see if it happens or not for the bulls. If not, 396.50 washout. Be careful there. I could see some downside action coming in.
All right. If there are any other tickers that y'all want us to take a look at, let us know. And again, keep an eye on that 389. So to me, if you're looking to go short, the closer to 398, the better. Then give yourself 50 cents or so. If that one goes ahead and cracks, keep an eye. Go ahead and get out. Preserve some capital and fight another day. Keep an eye on 400 because that'd be another area that you may be interested in shorting. And 395 is where I would look for support on the SPY. And keep in mind, you also have the 394.24 as the previous close. So just keep an eye on those things. And yes, that is a lot of things.
SPY testing the breakdown here. Be careful there.
Tesla pounding lows as well. Testing the intraday low yesterday of 180.90. We're currently at 181.30.
If you go ahead and look back on Tesla, the 180 held as support. There it is. That 180 bounce, beautiful. Went from 180 all the way to the 194s and then some to the upside of 200 a couple of days later. So that 180 area could be support.
YTRA really needs a 260 break, but it's hanging in here. YTRA. QH breaking down. I see big strong move out of the gate here. What happened on IC yesterday?
I see.
Gap holding up too after strong earnings.
All right, we got about a couple of minutes left, and then we'll go ahead and start with All Access. Matter of fact, I'll get you guys final thoughts here, and then we'll start wrapping up. What's up, fellas? Ryan, we'll go with you.
Did you say Ryan or Mitch?
I did say Ryan.
Okay, so next week is going to be a shortened week, right? Obviously, there's no market on Thursday for the Thanksgiving holiday. And then Friday is a half day. So the markets close at 1 p.m. Eastern time. So you got 3.5 days. We have a lot of data coming out on Wednesday because there is no market on Thursday. And Thanksgiving week is sometimes known as a crazy week, especially for some of these smaller cap stocks. We will often see big outsized runs. So one of the things that I'm going to do today is make sure I don't get myself behind the 8 ball. See what I did there? And be as prepared as possible for next week. That means this weekend, I'm absolutely going to be doing scans based on relative volume just to see if there's anything kind of getting gear in here for next week.
All right. Appreciate that insight, Mitch. What you got?
All right, so I'm going to keep battling here in the Amazon. Of course, I talked about 94.50s is my risk here. I'm even setting a stop buy here at 95.30s. So what does that show me? That if we do start getting back towards the middle and we start getting into my direction, I'm willing to add, but only on the top side resistance. So showing me that trend is going in my favor, then I'll look to add even further to the position. Right now, just holding towards the risk. Also on the downside, we'll see what happens there in Amazon. If I take a look at the sectors today really quickly for us, energy is down, leading the downside action. So oil to the downside wasn't a bad outlook there. We'll keep watch to see if oil keeps coming down. Technology also coming down fast, so be careful there. And that's down about 0.48 at the open here. Basic materials also in the red. What's in the green? Utilities, healthcare, and communication services. What could I expect to turn around? Maybe utilities. I don't expect to see utilities up, but we'll see what happens there. Healthcare doing well today. Healthcare plans, an area that I called out this morning because of WBA's outlook. I said, let's maybe take a look at Humana, up about 2% right now. UNH, CVS, ELV, all in that space. If you want to take a look at some of those stocks, those are definitely on the radar today. Those are healthcare names. Having a good day. All right, that's going to do it for us. Like always, you guys can keep up with all of us on Live Trading with Benzinga. We do this Monday through Thursday, starting at 9:05 Eastern. That's where you want to be if you want to keep up with us and the Live Trading team.
Happy birthday, Voodoo.
Happy birthday,
Voodoo. Happy
Appreciate
birthday,
you,
man.
pal.
Take care.
Appreciate all of you, and we'll talk to you guys on Monday. See ya.
Take care.
See ya.
This time I get to go ahead and remove them. It's a lot of fun. But give me a couple of minutes here. Let's go ahead and get started with our show. Let me go ahead and pull up my notes. All right, I'm ready to rock and roll. And let's go ahead and get this puppy on the road. And I want to welcome everyone. My name is Nate Suleiman, and I'll be your host for All Access here today. And it's going to be a fun show. We've got a few companies for you. And for now, we're going to go ahead and play our intro. All right, look, I don't know about you guys, but I 100% love that music. It just kind of gets me going. It gets me amped up. I just might need to find a way to have that be like my morning wake up alarm, because the one I got right now isn't as nice. But I need you to be as nice, and make sure you slightly, very slightly go ahead and caress that like button for Live Trading, for All Access, and all the lovely hosts that we have. And a quick disclaimer that All Access is one of the ways that Benzinga monetizes our YouTube channel. Every company that's appearing on today's show has paid Benzinga to be here. We are very upfront about this. However, what they don't know are the conversations that we're going to have, the questions that I may be asking, and they also know to expect some questions from the chat. So make sure you're active there, drop your questions, and I'll absolutely do my best to make sure to get them answered. And we wouldn't have had this show possible without our lovely sponsor, TiiCKER.
What is TiiCKER? That's right, TiiCKER with 2 I's, just like tickering. TiiCKER, where investors discover shareholder. Start tickering today.
We're actually going to get a chance to hear from TiiCKER later on today. But if you want perks for owning your company stocks, TiiCKER has revolutionized how everyday investors are rewarded for brand loyalty by connecting consumer with perks for the brands that they own. So make sure you check out and see what perks you qualify for today by going to ticker.com/Benzinga. That's TiiCKER.com/Benzinga. Or to make your life easy, you can click on the link that's in the chat description. And once again, just a reminder, the Benzinga All Access listeners, make sure you visit ticker.com/Benzinga, where you can register for a TiiCKER account, connect your brokerage account, and receive a $20 Amazon gift card once your account has been connected for 30 days. Appreciate you guys hanging out with us again. And I've mentioned we have plenty of great guests joining the show. And today we start off with none other than Brian Cox, who is the chairman and CEO of SurgePays. We've had a conversation with Brian in the past. Let's go ahead and bring him up. What's up, Brian?
Hey, good morning, man. I tell you, I was already amped a little bit because of the week we've had and some of the news we put out this morning. But with your guitar intro, man, I'm ready to bust out.
That's what I'm saying. Like that intro is everything. But look, you and I have had plenty of conversations. We love having you on the show. But for the viewers that might be new to this, can you just shortly explain it to me like I'm 5? What is it that your company does?
Yeah, sure. for 20 years, I've been involved in the underbanked and underserved market, the folks that don't have credit, bank accounts and what have you, that most of us on your show probably take for granted. It's about a third of the country. Our addressable market is about 100 million folks. And we reach these folks by providing financial products, prepaid products in the community stores, the C stores, the bodegas, the tiendas that are in the neighborhoods where these folks live. So primarily prepaid wireless, mobile broadband, and other financial services that folks that don't have bank accounts would be able to take advantage of, and life enhancing products. So it's a fantastic time to be in our business, and you can see it in our results. Things are going great, and I think we're right company, right time right now.
Oh, believe you me, I'm a math guy, right? Even though I couldn't find X in high school. But speaking of your earnings, though, I want to go to the fact that you guys had about 2.5 growth, right? 250% growth year over year. But here's the real question. That's in the past. Talk to me about the future. Can you really keep that pace?
Hey, you know what? That is you tell people you don't have planned questions, and we don't. I'll vouch for that. We don't. But I couldn't have planned that question any better. We just put out the news this morning that we got the funding, closed on it yesterday, that I've been working on for 8 months. So that 2.5 growth you saw, that was with me, the disciplined, budgeted throttling of our sales, because I was not willing to take on dilutive term sheets with coupons, OIDs, convertibility. I made the commitment to our shareholders I wouldn't do it. I didn't do it. We crawled across broken glass to build a facility that doesn't exist out there normally, perfect for our business. It allows us to grow significantly. We've got access now to $25 million in this facility to grow. So when you look backwards, I agree. I don't like looking backwards either. That 2.5x growth was throttled, was disciplined, and it was excruciating for me to leave sales on the table. But it was the cash flow growth model that we said we would do to achieve this point where we get this funding financing. And now it's off to the races. We're going to be able to see what we can really do. And all of the things that we put into place to build the infrastructure for sales, I call them sales intake valves. Now I get to turn them loose. So you're about to see some pretty exciting stuff.
Well, that's really great. And yeah, no one likes an IOU, Brian. I definitely don't. I know that for a fact. That's why the prepaid business is a great business. By the way, just a quick question. It's prepaid. I know you mentioned that. Do you deal with credit at all in any form of fashion, or no?
No, don't deal with credit at all. And as a matter of fact, a lot of our products are government subsidized. So, for example, our mobile broadband is actually paid for by the government. We've got it's well over 200,000 households we provide internet access to. And those are the folks that, the government found out during COVID when all these folks were not connecting to the Zoom classroom meetings.
Yeah.
It wasn't because they didn't care. It's because they didn't have quality internet. So we're one of the companies that got the license to provide this service. That's booming for us right now. And what we're using that, well, number one, it's a very profitable, channel, but we're using that to penetrate the market. And now coming back in through that convenience store in these neighborhoods to really corner the market, which was our overall big picture plan that we're a little bit ahead of schedule on.
Yeah, no, that makes perfect sense. And the reason I asked that is because I read the other day about how the American credit card debt is close to like $1 trillion, and that was, obviously a little disheartening, but it makes sense with all the unfortunate challenges we're dealing with. But let's go ahead and pivot back to subscribers. Obviously, I know how valuable our community is to Benzinga, so I can only imagine how valuable it is to you guys. So, the value of a subscriber, whether it's in the household, whatever the case may be, explain to me a little bit about maybe the long-term value of a subscriber to SurgePays, but also any plans to have any additional products that might be in the pipeline.
Oh, well, you know better than that now.
I just give me a little something, just a little something.
Just to clarify with everybody, just in case they don't know about the company too, I am by far the largest shareholder. I got in this for the big picture play to attack this market in an era where we know the big guys are going to lag and come in a couple of years. So I call it the tip of the spear products. You got to penetrate the market with something that the folks can't say no to. So basically free internet, you can't say no to that. There's a reoccurring revenue model there that we build that they just keep stacking month over month. So once I'm providing you free internet, I've got your ear, I've got your eyes, and I've got your appreciation. So absolutely, we've got our own prepaid wireless coming in that, would be the equivalent of a track phone boost, Metro PCS, but I can cut the rates because we're already in the convenience store where you're going to go pay your bill in cash. It's our platform. It's our FinTech rails. So we've got that competitive advantage. And then we've also got the fact that we're already making a fantastic margin on you in your household, so I can cut and lower your costs. And there again, it's a cool kind of gratifying thing in your soul where, yes, we can be very profitable. We can have, this 2.5x plus revenue, but we're also helping people. Every dollar that you see on our top and bottom line was a result of providing an essential service to someone that might otherwise not had access to it. So
yeah,
it is a really energizing deal. It's one of the reasons why you keep going, because not only do you know with every bead of sweat that you drop, there's a dollar attached to it, but every dollar is a result of helping someone that may or may not have had access to internet or some of the other products we provide.
Yeah, well, with you being the largest shareholder, there's no question that you're putting money where your mouth is. Speaking of which, yesterday you were on, or with your last earnings call, you were asked about EBITDA and growth and things like that, and you stated something along the lines. Don't exactly quote me on my notes here, but you said something on the lines of pouring every dollar back into growth. That is essentially a land grab. Can you explain the growth strategy a little bit more, but mainly when we can expect positive EBITDA for your company?
Yeah, sure. And let me be very clear. I believe in the old Napoleon Hill laser focus on a few things. So what I'm laser focused on is growing our subscriber base and our revenue as fast as I can. And my philosophic view on business is you can't focus on 5 or 6 different metrics and accomplish all 5. It's impossible. And the rate that I want to grow the company, EBITDA doesn't factor in. As long as I'm not burning money where I have to raise capital and dilute my shareholders, including myself, EBITDA doesn't factor into any business decisions I make right now. Now, next year, when I believe we've got when we've got traction on NASDAQ and we're starting to really be evaluated after a year of being on here with my peers who are trading at up to 17x earnings, we're not right now. So EBITDA, and I'm not raising capital, and, I'm not looking to use my stock as currency to trade or buy companies. So I'm never going to say the stock price is not important. Obviously it's important. It's important from the round. We got in this for the stock price. But right now, me getting to 500,000 subscribers and knowing my margins are about 50% and what that means to earnings per share, if I don't sell stock to get there, that's the EPS that I'm excited about, not Q3 of 2022, Q3 of 23, 24, and 25. That's where I think our shareholders will really see the value kicking in. So my laser folks say we're right on target with exactly the plan we laid out. And I'm focused on that 500,000 subscribers. And honestly, the day we clip 500,000 subscribers, I'm going to be refocusing the team on 1 million subscribers because it's out there. And just to put that in perspective, we just got a report. The FCC put out a report on only the government subsidized broadband, not the other products we have, but just the government subsidized. All the companies out there providing that product, there's only about a 28% penetration after over a year and a half of companies providing this services. So we're only scratching the tip of the iceberg on what the potential is with that market. And like I said, we've run out of devices every month. So now we won't be running out of devices. We're locked and loaded with this funding. We've got a tremendous amount of cash to go get this market. Again, it's non-dilutive. It's not term debt. We get to clean up the balance sheet. So we're jacked, man. As a matter of fact, I'm running on fumes. Again, going back to your intro music. I mean, I was on the phone with my sales guys till about 4 a.m. I forgot that I had this early. So I haven't even had coffee yet, man. You're my first conversation of the day. So
well, hopefully with this conversation give you the jolt of energy that you need. But look, this is a big number that you've been talking about, right? 500,000, 500,000. My question is, how quickly do you think you can get there? And then second, you added Jeremy as the head of FinTech division. What role is he going to play into that? So how quickly are we getting there? And what's his role going to be in making sure that happens?
Yeah, now this isn't guidance. I got to jump through hoops and have all the legal.
I know.
I got to run the gauntlet of taking the beating for that. But my goal is to get there Q2 of next year.
Okay.
If things fall as they're looking right now, and the reason is that's a great segue. Not only can we amp up web sales.
Yeah.
Because now I don't have to worry about, hey, I've only got 40,000 devices this month. We can't go over. Now I don't have to worry about that. We can do 80, 90, 100 if we've got the sales demand. But also in Q3, we integrated our software platform it's our CRM for wireless customers. We integrated it with our FinTech platform. And, that doesn't mean anything, but the result to the market is now we can enroll customers for this free government benefit inside the convenience store. We're the only company out there that can do this. Well, why is it important? Besides, well, we're first market mover. These convenience store owners, we surveyed them. 70 to 80% of their customer base actively uses SNAP EBT cards at their store. That customer whips out a SNAP EBT card. Hey, Mike, why don't you let me hook you up with the benefit for free internet? I can get you a tablet and free internet service while you're here. Takes about a minute. Boom. That store owner just got paid for helping his customer. That doesn't exist now. And if you look outside, the weather, and I heard you guys talking about it too, man, it's cold.
Yeah.
Everyone in our market enrolls folks. If you've seen kind of like the open enrollment for Medicaid or Obamacare, using the pop-up tents in the communities, brother, those pop-up tents are migrating south right now really quick. Yeah. So you've got 3/4 of the country that's going to be in slow mode because of the weather, because they're outdoors. Not us now, because we're going to be inside where this customer base shops 3 to 5 times a week. So between that, the web, and no longer being throttled, and now I can slam the gas, and which is really my forte, is scaling a company. I'm not so much just an operational guy. I'm a scaling guy. I'm a reoccurring revenue growth, slam the gas mentality. And now I get to be the real me as well.
I love that. Now here's a question for you, because you're talking about, slow, the winter, staying at home, things like that. Are you at all worried about the recession, the possibility of a recession, whatever you want to call it? And the reason I ask is because I know you said the government helps pay for, the assets and different things like that, and your margins, you can go and help the customer out. But I couldn't do what I do for a living without internet. I don't know if I can speak on that for everybody. By recapping it back, are you worried about the recession and possibly having that impact your business?
I don't worry as a general rule.
Yeah.
And this is, these questions are always a little difficult because I want to tread softly on this.
I understand.
I don't want to ever look like I'm the beneficiary of doom and gloom, because I'm not. I like helping people. But what's unique about a recession, or a time where you have immigrants coming in, the population, or a time where you have folks that may be more in need of these essential services, we provide it. Yeah. We're there. So if you're on any government program out there, we're able to provide you this service for free. It's subsidized and paid for by the government. But what we can also do is provide you other products that you will pay for. So let's say you've got your smartphone or your tablet paid for by the government, but you've got kids who need it for homework. You've got a girlfriend, wife, or a family unit, mom, dad. People need to save money wherever they can. And because we're so efficient in delivering these services, we're able to do it. And you know what? I didn't even answer the part where you asked about Jeremy. Well, that's because it ties back in. The way we did this, by going through that convenience store and providing that service at the cash register to those customers, where they can, now they're dialed in and they got quality internet. Jeremy is a 2.0 version of me. I can't do it all. Jeremy is a hard charging guy that's been in the prepaid and C-store world for 20 years. So now I've got another guy who wakes up 7 days a week thinking about, how do we get more stores transacting on our network? How do we get more sales per store? And how do we increase our margins per sale? So that perfectly ties in. And think about this, as we're growing, we've got 8,000 stores transacting on our network right now. What kind of sales pitch is it? It's not even a sales pitch now for a guy to go pull that door and say, hey, Joe, you're taking EBT here, right? SNAP EBT. Hey, look, we work with the government to provide, quality internet to folks. I can pay you an upfront commission and a residual every month. Right here, you can be the tech hub for your neighborhood. Oh, by the way, we're going to enable you to take payments for every prepaid wireless company out there, and reloadable debit cards and gift cards, and really be that quasi bank for the underbanked in your community. It's not even a sales pitch. And by the way, it doesn't even cost anything. We're helping that guy make more money per transaction, where he doesn't have to spend any money on inventory. So, now I think you're going to see, a lot of people think, and, sometimes people want to get a little bit myopic and just look at one product and think that's all you should focus on. Well, big picture, I'm 2 years down the road. I'm using ACP, which is the program, the subsidized program. I'm using that. It's chess to trigger more stores. More stores equal more sales and more products we can sell to this community. So there's definitely a big picture plan that we're executing here. And it's just a slightly ahead of my original schedule. And with this funding that we just announced this morning, man, we're off to the races.
Yeah, no, I definitely agree with that. Especially the biggest thing is, you have growth, but investors can't go back in time and invest in the company, right? They have to kind of worry about the future. But I think we got plenty of insight of what we can expect, the 500,000 subscribers and different things like that. We've got about less than a minute here. We've covered a lot of things, but Brian, I'll turn it over to you in case you have anything you want to talk about that you were hoping I would ask about. The floor is yours.
Hey, no, I appreciate it. I always enjoy the conversation here. I love talking about what we're doing. I've got a great team. And the cool thing about our team, I'm an old offensive lineman, so I incentivize all my folks. And one of the reasons I went public in the first place, I wanted the people around me. We knew there was going to be a land grab in our market. We know that the big guys are coming in 3 to 4 years. We want to build it because they're not going to build it. They're going to buy it. So we do have an exit built in to some of the numbers in the future. And it's well beyond the market cap we're at right now, man. I didn't get in this to build $100 million company. We got in this to build a multi-billion-dollar company. And the cool thing is we've got the products, the services, and the market to do it. Now we have the capital. So yeah, man, y'all stay tuned to what we're doing because things are fixing to light up.
All right. Appreciate that. Thank you so much. And definitely look forward to more conversations, especially after earnings are announced. So you can actually tell us a little bit about those nuggets that we talked about here. That is Brian Cox, who is the chairman and CEO of SurgePays. Thank you so much, Brian. Talk soon.
Hey, y'all have a great day and a great weekend. Thank you.
Take care, pal. You got to love it. I say it all the time. Call me your broken record. It's great to talk to the executives, especially after they just reported earnings. So you can kind of have that personal one-on-one conversation on what's coming up, what to expect. And what's coming up for you guys is now going to be TiiCKER, the company that makes all of this possible. And it's always great to kind of figure out what exactly is it that TiiCKER does, how more you can go ahead and get involved. So without wasting any further time, we go ahead and bring up Jeff from TiiCKER. How's it going, Jeff?
Hey, pretty good. And I love that you were talking to Brian Cox from SurgePays, one of our shareholder rewards clients.
There you go. See, I promise, you know, that little transition, smooth, you know, smooth. Shout out to the producers for the run of show and the way we do things. But man, Jeff, appreciate you hopping on the show. We obviously have you guys as one of our sponsors, but quickly for the folks that may have just missed that intro, what is it that TiiCKER does?
Yeah, TiiCKER is really the first shareholder rewards platform. So you own public company stock, you should get the perks of ownership. Like if you, if you get Marriott Bonvoy points or Delta Airlines that are American Airlines, any of those have rewards, but you're an owner. Why shouldn't you also get perks for that ownership? And so the industry, we started a couple years ago, and TiiCKER has helped drive a really new category of shareholder loyalty. And there were only 8 public companies that had rewards 3 years ago. There's now more than 40. We're adding new ones every day. Just added Lionsgate. So you might like some Dirty Dancing or a little Hunger Games or John Wick 4 coming up in theaters. You know, that's Lionsgate. They also own the Stars platform. Yeah. And all of those, tens of millions of fans and Stars subscribers, they didn't get rewards for being an owner in Lionsgate. And Lionsgate's like, hey, what if we converted those consumers, those fans, into shareholders? And that's why they came to TiiCKER, and that's what TiiCKER does.
I appreciate that. By the way, I see you've got snow in the back. That's a beautiful sight to have right out the window. Jumping into the perks of things, right? So like, just to really pinpoint it, what kind of perks do your users enjoy? So we can understand why your average trader signs up for TiiCKER in the first place.
Yeah. So again, free to use. We've got app and web platform. Go to TiiCKER.com and actually go to TiiCKER.com/ticker symbol. So whatever the ticker symbol, LGF for Lionsgate, SURG for SurgePays, and those direct URLs get you to discounts on footwear or appliances at Whirlpool and Maytag and KitchenAid. The film movie tickets discounts, or a discount on wireless or free iPads from SurgePays. And so it really is a lot of different perks. Real Good Foods is a hot one right now. Again, they went public about a year ago. They better for you frozen food. You get free product. You get early on a testing new flavors and the ability to really be engaged with those brands that you love. And so your investors, your traders are looking at certainly fundamentals, but the core of us as retail investors we're buying what we know. We're buying what we shop. What brands do we like? Who do we want to lead from a CEO perspective? Yeah. And that's been all through time. Retail investors will buy local. They'll buy, again, brands that they own or shop. And so we're just simply connecting that relationship with the public companies. So the public companies are our clients, and they say, yes, we want these investors to be consumers, and we want our consumers and fans to be investors.
Yeah. Well, we got the insight in terms of what the customer gets, right? What the trader gets by signing up with TiiCKER. Let's go ahead and flip it to what the publicly traded companies get out of it.
Yeah, so it's really it's targeting investors. So just like your companies are announcing earnings and they have analysts and institutional investors,
right,
there's no way for them to reach measurably the retail investor. And so this is really a way to do that. Is you have to get them to opt in. Why would you say, hey, I own the stock, unless you give me a reason to? And so that's connecting to talk to the CEO, or it's giving them a reward. It's basic human nature. But I think that relationship of the public company and their investors is becoming a bigger thing. And you see the meme stocks and what that's happened. We think this is really the evolution of meme stocks. Is AMC has millions of investors. They have 800,000 people in their perks program for shareholder rewards, but they only give free popcorn. That's because they can't validate, yeah, are you actually a shareholder?
Yeah.
The Lionsgate is like, well, we validate and we're going to give you these discounts, and they're graduated discounts. The more stock you own, the more value you get.
Yeah.
And so that's the companies look at it as, it's 30% of trading volume in some months in the retail space. That's it's a big audience. And oh, by the way, every investor in the world is a consumer. And so that's the real connection that the companies get.
Yeah. See, now that right there, I can kind of quantify, if you will, where it's like, hey, if I own X amount of shares, I get X amount of discount, or this, that, and there. And that to me is like, okay, that is true value coming right back to me, not just as an investor, but also then as a consumer. And it's a win-win situation for me. So that I really do love. And hopefully we can see more of those type of discounts. In my head, I'm thinking of all the brands in terms of like your Nikes, your movies, your, Six Flags is a publicly traded company, even though I hate roller coasters, but I'll deal with it. So
you
no,
like elephant ears though, right? You gotta like elephant ears.
Absolutely. Who doesn't like going to a random person and having them, guess how much you weigh? That really freaked me out when I was younger. Still don't know how they do it, but you're not a broker yourself, right? You're not a brokerage company, or you're not a broker. How do you kind of integrate with the user's brokers so to confirm and verify that they own what they say they own?
Yeah, so we're a fintech, so we plug into the platform, in our case Plaid, which is what most of the financial apps and websites plug into. We also have direct APIs or direct connections into a half a dozen public brokerage firms, and that really is important because you don't want to switch your broker to get these perks. You just want to connect whatever account you have, be it Schwab or be it Ameritrade or Robinhood or anything in between. And so traditional investors, longtime investors, new investors it needs to be easy for them to do it. And so I think that's the key. Any 150 plus brokerage firms, you can connect your account, and we verify that ownership. And when you connect your account, you might be coming for a Wolverine Worldwide because you love Merrill or Hush Puppies footwear, but you find, oh, ding, Real Good Foods or Whirlpool or Lionsgate, I also qualify for others. And that's why you have a platform and really a centralized place for perks.
You're making it easy, right, to go ahead and get perks for the companies that you're invested in. What about security, though? Because, I mean, there's so much conversation about cybersecurity being the new threat, this, that, the other. How am I protected by signing up on your website and connecting my broker as well?
Yeah, so that really is, the investment, millions of dollars in tech and APIs and building that security platform. Number one. Number two is we're hosted on Amazon AWS. We're partnered with Plaid, which is multi-billion-dollar. They do Stash and Bumped and everybody else that does fintech. And then we're constantly monitoring it in real time to make sure that it's secure. But that is one of the biggest issues, particularly for a newer investor. So your investor is much more experienced and really used to doing this kind of thing. But you really have to invest in the technology so it does happen seamlessly, and you get one chance to connect. And something that I think is really a value of our partnership with Benzinga. There's two things. One is obviously your audience, and there's a lot of connection here. But the other piece is that on any of your pages, so you go to any public company's page on Benzinga, you're going to see a perks button. That never existed before, but it makes sense. I'm going to look and see, hey, I'm looking, do they offer a dividend? What's the trajectory? What's their, buy sell rating? And, oh, by the way, do they have perks? And if they don't have perks, it goes to request perks. Nike doesn't have perks. Doesn't make any sense. Why wouldn't they want to convert their 20, 30 million retail investors to consumers and vice versa? So making that easy. So we really appreciate the partnership with Benzinga to say, wait a minute, this is another piece of shareholder return. If I can get a dividend, I get price appreciation, and I save $100 on an appliance every couple of years, that's real value. And I think that creates stickiness with the investor. And I think it's ultimately, you could have perk ETFs. You could have funds that are based off of the value that you get. And that's that shareholder lifetime value. For the public company, what's the value for them to be connected to the retail investor? They're long-term holders. They vote with management, and they spend and are brand loyal.
Yeah, well, you talked about management, so I definitely want to talk about your company in terms of the leadership team that you have, who's surrounding you in terms of making sure this is successful, and if you could just give us a little bit of insight on who helps you run TiiCKER.
Yeah, sure. Thanks for asking. It is a team effort, team sports, and so I've got a CMO that came from big brands like Nabisco, Frito-Lay, and understands that CMO mindset. Our chief sales and growth officer. She came from the sports world and sponsorships. So how do we, again, engage these companies in their campaigns? Because we got to go out and find the investor. The chief digital officer came from actually a large rewards platform. So employee rewards company. He was running that business. And this has a very similar aspects to it, is rewards that you get as an employee, also now as a shareholder. And then, sales team members and other professionals. And then obviously my COO is from the investor side, and that investor relations individual, the person that connects with the street, has really ignored retail investors. I did investor relations for 25 years, and I was trained to ignore retail because they're inefficient, they're small, you can't measure them. And so by connecting with them and building a relationship, it becomes worthwhile. And so try to have all those angles, the loyalty, the marketing, and the investor relations. And that's how we go to market.
And what's cool is that it seems like anyone who runs their specific department has experience from there. So like investor relations has experience from there. In terms of rewards, you have someone that dealt with employee rewards. The sports, background that you mentioned about, that's a great experience for her to have and to help out with. So I like it. It's like everyone has their own specialty to make sure they can go ahead and attack what they've got to take care of. One question for you is, and you're not publicly traded, so maybe you can give me a little more insight than the others can, but any other tickers that our audience can kind of look forward to, or anything down the pipeline that you can maybe tease about before the actual news releases? Anything?
Yeah, so we've got some. We just announced Lionsgate on Monday. Actually, Bloomberg broke that story. I think you guys have something on it as well. But that was the vice chairman of Lionsgate coming to us and saying, "We know we want to do rewards, but don't know how. Can you help us?" So we've got some more coming. Before the end of the year. We're also in capital raise mode, so I'm sending out docs this week. This week is almost done, but they're supposed to go out this afternoon, and so we'll be raising another round. That's triple the value that it was 2 years ago, and there's lots of in the marketplace. The VC world and the fintechs pulling back. You're not really seeing that at the seed or Series A rounds. Because again, the fintech was the most funded category last year. It's still a big opportunity, and so look for more news and big brands signing on to TiiCKER, as well as again more capital for us to grow. And I think that's key. Is it's really a function of how fast. As these bigger brands sign on, the others want to be in, and so now they're saying, how do I get to be the exclusive? And the answer is that you can't. Unless you're willing to buy that exclusive, because it's going to be ubiquitous. Every company should want a rewards program, just like they have a loyalty program or a marketing to their consumers. And again, the numbers are ridiculous. You know how many retail investors there are in the world, over 100 million, and that's just in the U.S. But you look at the consumer spend, the opportunity to find niche audiences, and there's no platform to do direct to shareholder marketing. And so, we're also looking at partnerships, Benzinga being a great example. We've partnered with some transfer agents and some others who are trying to reach that audience, but don't know how to measure it. And so Benzinga, great example. We find that people will come on your show and then go to the brand page to check out the rewards. And so it actually creates measurability for the campaigns and projects that you guys do. And so that really is the origin of TiiCKER. What came out of investor relations, and the aha moment is in the marketing department when they're like, wait a minute, you never told me, Costco, that we have 20 million individual investors that should become members.
Yeah.
And that's where it gets really fun.
So when it comes to challenges that you may have, right? Because obviously I see it as a win-win, right? I get to sign up for X company, not just hopefully make money when their stock price goes up, but also get some discounts and savings on that side. What do you feel like is the toughest thing that the consumer doesn't quite understand about TiiCKER? Like any tough messages that are tough to translate to the consumer? Does that make sense?
Yeah, absolutely. So I think our easiest adoption is someone who's a trader who is active in the market. And so for them, this is a bonus. They already know the companies that they like, the categories, the industries that they're going after. And so this is really a bonus. But converting a consumer to TiiCKER takes one extra step, which is to get a brokerage account.
Right.
Or to hold more than just the mutual funds and ETFs. And so that's the hurdle that we find is absolutely I want a reward. And then I click through to the page and it's like, oh, I got to have a brokerage account. I got to buy the stock. Okay, can you help me do that? And so we do offer free trading on our platform for that consumer. And it's offered by other we've got 4 or 5 partners that do the trading, but it's offered for that reason. Is if we've captured a consumer on site that doesn't have a brokerage account but really wants that discount, we want to convert them into a shareholder. And so that ability to do that. So we don't want to be a trading platform, but we want to make it easy for the consumer. So that really is the hurdle. Obviously, the other is, this is a cart and horse thing. You come here and be like, I love TiiCKER. This is a great idea. And you're only going to find 150 perks. I mean, that's great, but it's not 1,000. It's not 10,000. And that's where ultimately this should be certainly consumer, retail, or corporate brand public company should have a perks program. Even B2Bs are looking at doing it. Shift Group, they make FedEx and UPS trucks and Amazon vehicles, and they had a perk that was an Amazon gift card to tell people, hey, by the way, we're the engine behind this last mile delivery. So we're going to continue to see B2B as well, but the center of the circle is a consumer brand or house of brands, Kimberly-Clark's, the P&G's, the Whirlpools, the Wolverine Worldwides, these companies that have lots of brands in their portfolio and every day trying to reach those consumers and have ignored that retail investor.
Now, what's really cool is, by the way, TiiCKER is not a publicly traded company, so there's no ticker for TiiCKER.
Not yet.
Well,
not yet.
Do you want to talk about that? I wasn't going to put you on the spot, but let me just ask you because you brought it up. Plans to go public?
Listen. Absolutely. Our exit strategy is IPO because we're going to go public to our own marketplace. Yeah. I mean, if you look at, we're building, tens of thousands, ultimately hundreds of thousands, millions of consumers who hold stock and get rewards. And so they will find the real tangible value in what TiiCKER does. And the public companies are saying, you helped me, you are my retail investor strategy. This makes a lot of sense. And so absolutely that should be the outcome is to be a public company. I've done investor relations for 25 years. It might be my hand at trying to do it for myself instead of being behind the scenes. But that's the vision is just like Robinhood did it. Robinhood, their timing wasn't great. They ran up and then ran back down. But I think that's that they went public to their own audience. And so I think that would be the exit strategy. And unless a SPAC comes along, and says you're worth $1 billion, then maybe I'll listen to that too.
Yeah. Well, you might have gotten yourself a potential client here, but something I did want to talk about was when I was checking out your website about a couple of months ago, when I started hosting All Access, you've got Starbucks as one of your companies that works with you. And that's really cool. Cause I mean, who doesn't drink Starbucks?
Right. So that's an example of a ticker perk. So we've also created perks for Starbucks. So Starbucks is not a paying client of ours, but we know that obviously there's a lot of holdings of Starbucks. Same thing with Amazon. They're not a client of ours, but we can offer an Amazon perk, and we've got an Amazon perk that's both tied to a gift card as well as an AMZN T-shirt. It's a basic thing, but people love that, and so it kind of gets to some of the ways that we're trying to a bit of an everyone wins. So if we get somebody to ticker, we want them to see value right away. And so if they don't hold one of our 150 perks, we still want them to find an opportunity to get value. And so that's a great example. Starbucks should absolutely have a shareholder reward. Why wouldn't they? And that's a function of IR doesn't talk to marketing, and marketing doesn't know if it's legal. And so you have this triangulation of conversation, but we absolutely will get on those radar screens. And that's why Lionsgate was it really was our biggest win, both monetarily, but also perception wise. They have 26 million Star subscribers. They're in the news all the time. They're talking about, maybe spinning off two public companies out of their platform. It's high profile, and that's an example of the top of the food chain. Vice chairman, the Wall Street spokesperson, he said, we need this, go figure it out. And that's our best sale, is when the CEO who has marketing, sales, and IR in his line of sight. So that's I think what we want to do is have consumers and retail investors like you and your platform to say, hey, why don't you have a perk, Starbucks? Why wouldn't I get a discount? And what's more loyal than being an owner? And so I think that really is, this ball rolling downhill, it will become ubiquitous. And that's what we're seeing, is people calling us now and saying, we want to be your fuel and EV company, or we want to be your footwear company, or we want to give this discount to our shareholders. And so that's really where we're headed. You're going to see a whole lot more news coming out soon.
Yeah. Well, hey, really excited for that. It's interesting you mentioned how, shareholders that use the brands are most valuable. It reminds me of the time when I was an intern way back when in college, and I worked for a mattress firm. But before I worked for a mattress firm, I went ahead and bought shares in the company. And then during the interview, I mentioned it, and it was like what kind of separate me apart, where it's like, hey, I don't want to just work here because I need a job, but because I believe in what you're doing. I believe in the fundamentals and this, that, and the other. So it's kind of nice, once again, to put money where your mouth is. But Jeff, I'm really looking forward to more of these perks. It should be a lot of fun. If you can find a perk that if I own a couple of Tesla shares, I get a free Tesla, something like that, that would be really cool. I'll take advantage of that. But
for sure. And you mentioned mattress firm. So I've got another business where Gary Fazio is on my board. So you probably work with Gary or Steve Stagner.
Steve Stagner, former CEO,
are my fellows. Yeah, it's my boys.
Nice. I got a chance to talk to Steve at the Mattress Firm headquarters again, way back when. But Jeff, pleasure talking to you again. Chat. We'll drop the link in the chat in the description as well. Check out TiiCKER. That's TiiCKER.com/Benzinga. Jeff, really looking forward to more conversations with you, pal. Take care.
We'll do it. Thanks, man. See ya.
Absolutely. If you guys haven't already, make sure you go ahead and check out TiiCKER.com. Link your brokerage account as well, so you can go ahead and get all those perks. I'm telling you, I already am signed up, but I don't own Starbucks, right? So I wasn't able to take advantage of it. But now I might just own the TiiCKER so I can get me a nice little free t-shirt. But yeah, the perks are really cool. And the biggest thing for me, that we'll move on with this, the coolest thing to me is the fact that they are possibly able to have perks for companies that even if they aren't signed up with them, right? To me, that's the biggest thing, where it's like, hey, cool, people use Starbucks, let's have some type of perks for them. Or people use Apple products, let's have some perks for them. Different things like that. Southwest Airlines, if you fly all the time, right? Just hotels and cool things like that. So that's really an interesting revenue source, or whatever it might be. Maybe I'm not using the right terminology, but that was great. That was fun. And then now we're going to move on to someone who I've had plenty of conversations with, but it's always cool to learn more about what's going on with the company. So without any further delay, let me go ahead and bring on my man, Dennis, who is the president and CEO of BioLargo, ticker BLGO. What's going on, man?
Hey, Zune. Good to be here. Thank you.
Of course. Thank you for coming back. Last time you were outside in the nice little sunny time and enjoying life, and now you're back on the inside. What is it? Too cold outside?
SoCal. I don't know. It's hard to beat. 72 and sunny, as they say.
Well, I'm here at 38 and freezing. So
there you go.
that's why I'm inside with a nice little sweater on. But Dennis, appreciate you hopping on, man. We've had plenty of conversations, but the folks that are new, explain it to me like I'm 5, what it is that your company does.
I'll do it, Sinead. Thanks. So we're an innovator and solution provider focused on all things sustainable with a heavy emphasis in clean air and clean water and a cleaner earth. And so really the company is a solution provider with extraordinary science and engineering, tackling some of the biggest problems that face our planet. And we're winning, right? It's been a long development cycle. And now we've got a couple of big winners and we've got a couple more in the hopper coming soon. So very exciting time for the company. And we're finding traction with our offering to the marketplace now all around the world. It's pretty cool.
That is pretty cool. Now, what's helping you out, though, is your 4 subsidiaries that you deal with. Their specific clean tech, right? So, like, what structure is the business like with all these different companies? Like, what are the advantages really as well?
There's really 2 categories, the way we describe it. There's an environmental group, which is 3 subsidiaries. Then there's a medical company. And everybody goes, how in the world do you have enough with a medical company in the portfolio? And of course, the answer is it was the science that brought us there. So one of our science assets, technologies, is a chemistry, and that chemistry turns out to be incredibly powerful in the medical field for infection control, surgical applications. And we brought in about $8 million into that venture through a subsidiary, right? So the subsidiary creates a structure in which investors can participate in a specific project. That's why you do it.
Right.
And so with that capital and with the parent company's capital, we cleared FDA right before COVID. And now we've got the first traction in the marketplace with sales and a sales network forming. And it's a long journey, of course, but incredibly valuable. They got a huge future ahead. So that's clear. And that's a good example of why we would set up subsidiary so that we could really dedicate funds specifically to a project. So we've done them all that way, and we have a couple. We have a PFAS opportunity that's just off the chart. It's one of the biggest sort of catalysts in the portfolio. We have an odor and VOC control operation that's doing industrial and now supply chain for a big retail hit, a product that's really, really coming on strong. And so anyway, there's the strategy is to leverage these technologies, right, through ventures that allow direct investment for partnerships to happen. Because really, everybody says, how in the world do you, change the world? Well, you do it a day at a time, and you do it with partners.
Yeah.
And so we're a company that partners a lot, right? And oftentimes we call that like a channel partner strategy, right? So we're not going to go direct to all customers. We're going to go through channels with partners that already have customers. And it's a really powerful way to build the business. And now we're watching that happen, right? Finally, we're watching that happen in a material way for the company. So it's awesome.
What's really cool is the fact that you've also had growth, right? If I'm looking at my notes here, but you had strong numbers from your Q3 earnings report, which included approximately about 111% increase in revenues from the same period last year.
Yeah. And the second quarter was just like that too. Don't miss that too. I mean, it's consecutive. And actually it's like,
so what's helping you? What's helping to be consecutive?
Yeah, so it is, right. So the idea, and when we started the company years ago, it's over a decade ago, right?
Yeah.
There's a decade of innovation. There's a significant investment in intellectual property and these assets. We argue there's about 8 platform technologies in the portfolio, which is pretty astounding. Yeah. And what it shows is a couple things. It shows our determination to continue innovating. That's really where our core skill set is. We brought in our engineering group about a little over 4 years ago. That gave us the go-to-market talent, extraordinarily skilled in science and engineering to work directly with customers, scale up, sell in, integrate. I mean, really, right? Powerful tools to really go out and capture market. Yeah. And so that unique skill set gives us the ability to say to a customer, literally, how can we help you? Right? And think about that. Not let me sell you a widget. Let me show you this really cool thing, because we got some really cool things. I mean, it's great innovation.
Yeah.
But what you learn and what we think is the key from a marketing perspective is we say to a customer, how can we help you? We've got great tools in our toolkit. And by the way, if our tools aren't right for you, we know how to get others. And if they don't have it, we'll invent it for you.
Right.
It's a pretty remarkable thing to say, right?
Yeah.
And we do that. We've had 2 big projects where we literally created the solution that had never been done before for a customer. And so that ability to operate with that nimbleness and that creativity, and then the determination, right, to see innovation find its way to market is rare. And I think from a customer perspective, it really means that we're able to work with a customer, a client, and a project to identify a target very carefully, stay on target, hit the budget, hit the timeline, and make sure they get exactly what they bargained for. And if you're on the other side of the equation, you go, thank God, here we go. It's really a good situation.
My question is this, and I love the fact that if someone needs something, you don't have it, you'll invent it. My concern, which I'm hoping you can address, is are the margins good enough to where if you're never able to use that invention for another company, you still came out on top to where it's worthy, right? So if I need a specific type of pen, you spent hundreds of thousands of dollars making it.
Yeah.
But what if you can never sell it to someone else again?
Well, there's a couple of things there. Yeah. First of all, you're right. We're busy, right? So what you do as a small company maybe of course shifts. I always say, if you look at the marketplace, the big gorilla companies, the billion-dollar multinationals, they created franchises on doing something extraordinarily well.
Yeah.
And they have multiple barriers to entry to compete, right? And so we're evolving in that way. And what you do as a smaller business to gain your market share will morph. It has to, because you can't possibly do it all.
Yeah.
So the selection of that opportunity is critical. And so it starts with, when a client says, we've got this challenge, the first thing is, we're not going to finance it.
Right.
That's very important. We're not financing that development. They're paying us to do it.
Right.
And so if you look in our portfolio, we've got a couple of really big projects from Q2 to Q3. We completed phase 1 of a waste to energy project down in Latin America.
Yeah.
That's huge. It's an enormous project. The first phase was a feasibility and some environmental impact analysis by our engineering group. And then phase 2, which will go into the multi-million-dollar category, we expect to start in Q1. And that's a preliminary design. Well, this is a $1.6 billion project. I mean, so again, think about that. It's a demanding job, but it's enormous cash flow. I mean, it is enormous. And also it really sort of demonstrates the technical expertise that's in the company, right? The other one is a company called US Nuclear. Well, US Nuclear is building portable modular nuclear power plants, right? They think that's a renewable source for the future. And in many ways, we would agree, right? So we were hired as an outsourced design team, right? And so again, just think about that. We also do work for the United States Air Force. And so we're juggling a lot of balls while we're also watching our innovations find its first to market adoption.
Right.
And so there's multiple catalysts. In fact, somebody says, how do we make money? I said, well, we've got like 10 different ways we make money. We've got customers, we've got innovations that we can license, we've got partnerships, we've got channel partnerships selling our goods. We're a supply chain partner for now a retail product that's going in the largest retailer in the world. It started about, 5 days ago, right? So we should talk about Poof for sure. But anyway, the point is that diversity has allowed us to survive what we would call the adoption cycle on innovation. To get new technology seeded in the market is extraordinarily difficult. And so now we're watching the fruit of that long investment cycle, the right talent, the right people come together to really make a big splash in the marketplace. So, and again, part of that thesis is we do believe that everything that we've done has a chance to be number one. It has a chance to fully disrupt a market. So this is extraordinary innovation unto itself. And then when you couple that with this attitude of service, right, with a customer to say, I'm not here to sell you a widget, I'm here to solve your problem.
Of course.
That's a big deal. So
yeah, I like that. I like that. The fact that it's like, hey, I'm not here to just make money, but I want to solve your problem. And therefore, you'll come back for the next one that you may possibly have.
It's absolutely happening. We're watching it. We worked hard to get our first cut in the old days, right? We'd say, gosh, I hope we get a customer. Now it's like, oh, we got a lot of customers. We got a lot of work to do. In fact, we talk about openly the fact that one of our biggest challenges will be staffing. I mean, we're growing, and you don't want to staff up and hope you get customers. You want to staff up as you get customers, right? So that's what we're doing, and that's a challenge because the growth rate is accelerating. Yeah, and we've been 100% year over year now for a few years, and we believe that will continue, and likely more. We're looking forward to 2023, and we say to ourselves, it's not a double. It could be 3 or 4 times. And so managing that is now a trick, which we're doing. And so we're not fearful of it, but that is where you have to do it. You have to do it to really supply that kind of service. So
yeah, you got to make sure you walk the talk. There was a partnership that I think you wanted to talk about. I apologize, I don't have it in my notes, but this is the beauty of having you on the show. Yeah, tell us a little bit about that.
Yeah, so again, we'd encourage everybody to look at the website Pooph, P-O-O-P-H.
Oh, Pooph. We did talk about this last time. Sorry.
Yeah, but
tell me a little bit about that.
Well, it was the largest growth, segment in our business for this last quarter for sure, and their numbers are just continuing to increase. So the way we describe it is there's components of our business that are a little lumpy. They're lumpy in the the trajectory, because what happens is you'll finish like a phase 1, you go to phase 2, and you might have a 3 or 4 month gap in between 1 and 2. It's not straight line, right? That's okay. The good news is they double and triple in revenue scope. Okay, so they're really important for the company. And it's just the way capital projects work. We'll have a customer say to us, we'll be ready to go in Q3, target Q4 to start. And then absolutely you'll get a call and says, oh, we're going to move that to Q1 capital budgets, right?
Yeah.
It's just the nature of the beast. Okay. The consumer product, however, is more straight line. This is a business model where TiiCKER, that's our partner, we started this about the first product sale was right after December of last year. So we're coming up on a year. And they're growing dynamically, and they're just now entering the marketplace with Walmart, which is a big deal. Okay. And there's 2 big retailers coming behind them, very national footprint, national retailers. Well, they sell direct to consumer right now through infomercials. Of course, they're on Amazon. They won all kinds of awards. It's incredibly catchy. So if you haven't seen it, watch the infomercial. I'm getting texts now from shareholders and from partners all over the world saying, oh my goodness, I see this infomercial, right? And it's so catchy. And basically it's promoting complete and instant odor elimination, right? So it's a chemical reaction that breaks down the components that make odors stink, and volatile organic compounds. So mostly organics. Anyway, super safe too, right? So complete, instant, and safe. And that safety profile, we've spent a decade validating all around industry and in the regulatory. And so fully defensible claims, right, that allow them to go out and show the world that this is a product that actually works. Finally, one that completely eliminates the odor. Right. Safe, meaning it's not going to cause skin irritancy or mucosal membranes or any of that. And it's safe. So we say safe for people, planet, and people, pets, and your planet, right?
Yeah.
So it's really cool. Anyway, they're blowing it out. Okay. And it's the science behind it, which is our science, is remarkable. And so remarkable in that it can achieve such a significant result at such low concentrations. That's pretty remarkable, and have such a significant safety profile. There's a lot of consumer products out there that kind of are not so not so gentle, not so safe, right? This one is. This is a super safe and effective product. Well, remember in that business deal, we partnered with this extraordinary group called TiiCKER Holdings, and the team behind TiiCKER has been supporting and launching big billion-dollar brands for 30 years.
Yeah.
And they selected this because they believe this product has a chance to become a billion-dollar brand. And in fact, the number one competitor they're targeting does a little over $1 billion a year, right? 1.2 or so billion, right? So this is big business. And again, they're in to compete head on with a better solution and a very creative marketing approach to get the word out to the market. So in that relationship, we're the supply chain. So we make the product, we sell it to them for a cost plus, we get a little royalty on sales for the technology license, and then we bargain to participate in their exit at 20%. Now their goal is and they've stated it, we're going to get to 100 million in revenue, annualized revenue. An annualized run rate. And when we get to that run rate, we're going to sell the business, and we believe it'll sell between 3 and 7x.
Yeah.
And so we bargained for 20% of that exit. So this is the kind of business that's transformative for our company, not only because it grows our revenue, we get to participate, it validates our science, it validates our business model. It does all sorts of great things. And then ultimately we're going to get a check. Now my target, somewhere between 50 and 100 million, just so we're clear.
Yeah.
And we believe it's very doable. And it's probably a lot closer than people realize. It's moving so fast. It's like a freight train. And when you watch the video, when you watch the infomercial, what you're going to see is this incredibly talented skill, this artful storytelling that explains value propositions in such a way that it's highly compelling. I mean, you see it and you go, and I always ask people, what do you think? And they say, I'd buy it. I say, well, did you buy it? Because you ought to go buy it, right?
Yeah.
And so we want to say, look, so start, it's going to roll. It takes time to roll out. Walmart has 10,500 locations. It doesn't roll out all at once, right?
Right.
So we're still working on logistics of exactly which stores are carrying the product so far.
Right.
And it will expand over time, but everybody needs to go to Walmart and ask for it and say, hey, when can I get this product?
It's on Amazon. Is that right?
It is on Amazon. Yeah.
Yeah. Because I believe this is without me doxing myself, but I believe this is the product.
Well, let's see.
That be correct?
PH. So you're no, you're seeing there you go.
Yep. Because the reason I wanted to talk about it is the fact that for folks that have pets or any type of odors and different things like that they want to deal with, right? It's an easy thing for them to kind of go ahead and check out the product and use it and different things like that. Because I mean, that's what it looks like. Yeah.
You should pull up poof.com real quick and look at the home site.
That's POOPH.com, right?
Yeah.
Yeah. Here we go.
I mean, it's really cool. There's a little infomercial there. You don't have to show it all, but once you see it, so there's the infomercial, right? To the right. Yeah. Upper right. There you go. And you just click it. And again, once you see it, you can't unsee it because you're going to see it on TV. This thing is airing everywhere.
Yeah.
And
I'm going to go ahead and drop it in the chat for folks. And of course, it looks like you get a nice little addition to it as well. Because I'm sure there's a lot that they can go and benefit from here.
The team at Ikigai is extraordinarily skilled and they're executing with precision, right? And from our perspective, it's one of the strategic partnerships in which they're really outperforming so many partnerships we've had, which is a testimony to strategy and skill, right? They've got a great strategy and they've got the skill to pull it off. And so in their model, right, they say when we spend $1 on advertising, we generate $4 in sales, $4 in revenue. So how do you grow sales? We spend more.
Yeah.
You just grow the business by marketing that product.
Yeah.
Anyway,
clearly the ratings are great as well. People love it. So if you guys are on Amazon, you can kind of check it out and test the product out for yourself.
And again, if you think about it from a BioLargo perspective, it's just it does a whole bunch of things, right? It validates the business plan. It also shows that this technology that's taken over a decade to find significant traction. Now we've been working in municipal clients, so we have a number of exclusive with big municipal clients. We're working with all the big national chains for waste and waste handling and wastewater, and all sorts of industrial applications is incredibly powerful there too.
Yeah.
But all that work set us up to be able to then instantly roll into a retail market with all the claims intact, including safety and the profile. And so that's a testimony to, as we say, preparation meets opportunity, right? All of a sudden you're in the spot to go with the right partner. And that's the trick, of course, right? Finding the right partner who really wants to carry the ball and go after something really dramatic. So they're out to build $1 billion brand, right? I mean, that's the key. And because of that desire, we can go with them and we can leverage the technology into revenue stream. Now, so we carried it all the way through the early adoption, right? And the early adoption means we found a market that's industrial. We proved it out. We became expert at it. We slugged away for years. And really, we're proud of the sales, but it's a scratch. I mean, it's like you barely make a dent. And then all of a sudden, right now, because of that work put into the right product design with the right spot, with the right team, you go big time. And that's what's happening. And we believe all of our assets are going to follow that path. That's the nature of the beast that we're in. So.
Yeah. Well, appreciate that. Always a pleasure talking to you, Dennis. Really appreciate you coming on. That is Dennis, who's the president and CEO of BioLargo, ticker BLGO. Thank you so much. And I look forward to more conversations. And you enjoy that sunny weather out there, buddy.
We want everybody to go to Walmart and ask for that product.
We'll make sure we do. POOPH. Make sure you check it out on Amazon. We'll go ahead and drop the link in the chat as well. Thank you so much, Dennis. You take care. Take care. Bye-bye. All right. Appreciate all of you in the chat as well. Again, you get to hear from the CEOs, the chairmen, and the executives straight from them. Get your questions answered. The questions that, we've got here. And shout out to Johnny and Michael who went ahead and prepared the questions and did the research so that I could go ahead and look smart. So we appreciate all of their help as well. And Chelsea and, let me go ahead and check something else here for you. I believe we're going to have live trading. That's going to, well, it may not be live trading. I believe it's a little different segment that Mitch is going to go ahead and do. But let me, if you guys have any other questions, if there are any other companies that y'all want to go ahead and see in the future, feel free to let us know. But for now, that's going to pretty much do it for All Access. We appreciate you guys hanging out with us. And of course, we appreciate TiiCKER for coming on and sponsoring this show as well. So on behalf of myself and all of us here at Benzinga, we appreciate you guys tuning in. See you next time. Bye-bye.